Few days ago, I almost blew a trade on oil. Trump spoke, G7 just announced the release of 400,000 tons of reserves. And the price dropped like in 3% just in 1 hour. I had already texted my team, I'm getting out at break even. Then I paused, took a breath, did the math, and I still didn't exit. Overnight, the price moved up 10%, and that's the trade I ended up closing. So, one thing saved this trade. And that's the same thing basically determines whether you make money or just completely screw it up. Let's break it down. Now, just imagine the situation. We take one chart, one asset, the exact same setup, let's say along from liquidity zone with a confirmation on a lower time frame. Everything by the book. We put 10 traders on it, same knowledge, same strategy, same risk management. On paper, they should all get the same result, right? But in reality, you will see a spread from like plus 5% to minus 15% on the exact same chart with the exact same setup. So, but how is that even possible? It's like everyone solving 2 plus 3 but somehow getting different answers. One trader entered on time and just let the trade reach the target. Another saw a minus like 20 points and closed it manually. The third missed the entry because after yesterday's stops, he decided to wait. The fourth moved the stop, you know how is it, right? Because it's about to reverse any second. The fifth doubled the position, the stop is too clean, gotta add more. Same knowledge, same strategy, but the result is different for everyone. Why? Because they know the strategy, but only if you can actually follow it. Okay, I know it sounds abstract, like behavior, discipline, sounds like some Tony Robbins bullshit. That's not our game. So let's get specific. What exactly do you need to do to kill even the best setup? The first one, missing the entry. The stop is there, all the filters line up, price in the zone, and you are sitting there like, maybe I should wait a bit more? What if it's just a fake out? While you are thinking, the price just takes off. You look at the chart an hour later and realize the trade played out perfectly, just without you. The second one, exiting too early. You entered according to plan, set your take profit at, for example, 80 points. Price moves like 30, then stalls. 1 minute, 2, 5. You start getting nervous. All right, I'll just take what I have right now. You close plus 30. 2 hours later, price hits your full target. You made 1/3 of what you could made. The third one, increasing risk after loss. You get stopped out. Of course it sucks. You open the next trade and instead of risking 1%, you go with a 3% because you know how is it, right? Gotta make it back. So the market goes against you again. But now you are down 9%. 2 trades and you just completely wiped out your monthly result. And the fourth one, freezing after a losing streak. 2 stops in a row, 3, you stop trading completely. And the next 3 setups, they all play out. You see them, but you just can't pull the trigger anymore. Just because fear takes over. 4 situations, in every single one, the strategy worked. And in every single one, the trader got in their own way. And every one of these mistakes is emotion, not analysis. So here's the tool I use to catch myself in the moments like that. Every time I feel like doing something with my position outside the original plan, closing early, moving the stop, adding, getting out, I run through 3 questions. Out loud or in my hand, doesn't matter, but I run them every single time. So the first question is, what am I feeling right now? FOMO, fear, the urge to make it back. If I catch an emotion, I get up, step away from the screen, walk around for a couple of minutes with no any phone. Seriously, just breath. 9 times out of 10, after 5 minutes, the urge to change something in the trade is gone because it was just emotion, not a decision. The second question is the risk still within the plan? Maybe I added somewhere and now the potential loss is like already 5% instead of just 1.5. The position is too big at the moment and my brain starts throwing unexcited signals. In that case, I cut part of position, bring the risk back to the plan like from 0.5 to 3% of the account, and instantly it's easier to think clearly. And the third question is there any technical information that actually changes the picture? Did the structure break? Did volume show a reversal? Did some news come out that fundamentally can change the situation? If yes, okay, there is a reason to adjust the plan. If not, if the only reason is it feels kinda uneasy, I close the chart and leave the setup alone. So just 3 questions: emotion or calculation, risk within plan, and new data. If all 3 answers are everything is fine, I'm just nervous, I don't touch anything. In a minute I'll show you how this exact checklist played out yesterday on a live oil trade with the screens. Alright, so here's the trade. Oil. We opened along with the team at $83 per barrel. Stop was at $74 and targets was from 100 to 120. We entered, the local high had just been taken out, the asset has trading in a range and we were building the position near to the lower boundary. Plus geopolitics, the Strait of Hormuz, Iran, the EU dealing with the supply shortages. Fundamentally, the picture was bullish. We entered, set the stop, and we wait. A few hours pass and then Trump says oil prices are under control. G7 agrees to release 400,000 tons of reserves. News everywhere. Price just drops 3% in just an hour. Locally, pretty aggressive. I texted the team in the channel that I'm thinking about closing it at break-even. Honestly, my hand was already moving. And then, stop. Checklist. First question, what am I feeling? Fear. Pure fear. The news hit and my brain is like, just get out. Okay, noted. I got up, walked around, took a breath. And the second question, is the risk still within the plan? Yes, stop is in place, position size is fine and still far from the stop. Everything is according to the plan. Third question, is there any new data that actually changes the picture? So I just sat down and did the simple math. 400,000 tons. What is that? Really? A drop in the ocean. The EU shortage is way bigger than that. The problems in the Strait of Hormuz is still there. Actual supply is still uncertain. So the news is just short-term noise. The fundamentals unchanged. So the answers, emotion, risk is fine, and nothing has changed. I just closed the chart and went to sleep. Next morning, I opened the terminal, oil up 10%. The market digests the news overnight and realized 400,000 tons changed literally nothing. Price just took off, the team made money. One trade, one moment of weakness, one checklist that stopped me from doing something stupid. The difference between closing at break-even and closing in a solid profit was literally one breath. And now, let's see how this played out over the long run. And spoiler, it's gonna blow your mind. So here's what happens when discipline kicks in. Trading starts to look completely different. You stop treating every trade like some big event. It becomes just a line in your stats. Some lines are red, some are green, and some are very green. A losing trade stops feeling like a tragedy. It's just a cost, like paying rent for an office. You pay it so the business keeps running. A stop is just an operating expense for a trader. That's normal. And here is the subtle point. The feeling after a winning trade can be even more dangerous than the stress after a stop. Because after a loss, at least you are alert. But after good profit, you relax. You increase the risk. I feel the market, I can push it a bit more. And that's exactly where the system breaks. Out of now here. So here's the question I want to ask you. If over the past year you had never interfered within your plan, never moved your stop, never closed early, and never added to a position out of emotion, would your account be bigger right now? You already know the answer, and so do I. Alright, that was a rhetorical question. Now let's talk about how to actually apply this starting today. Just 3 specific actions, starting right now. First, take the checklist from this video. 3 questions. Print it, write it on a sticky note, set it as a phone wallpaper, doesn't really matter. The key is that it's in front of you every time you reach for the close or add button outside the plan. Second one, after every trade, write one line. Did I interfere with the plan? And if yes, why? Just one line takes like 10 seconds. After 30 trades, you will have a clear picture. You will see exactly when you break your system. And most likely, there will be a pattern. The same trigger over and over again. Third, after 30 trades, compare the results. Split them into 2 columns. Trade where you followed the plan from the start to finish and trades where you interfered. Calculate P&L separately and you will see the difference. Wanna bet that by the plan columns is positive and the interfered one is negative. And wanna bet that the gap will be big enough to make you wanna hit yourself in the head. So well, that's what we dream to, discipline. In the trading, there is no shortage of strategies. There is a shortage of people who can actually follow these strategies. If you have a working system and you can stick to it with a discipline over time, the market will start paying you. By the way, yesterday's oil trade, the screenshots, the thought process, the decision in real time were first shared in our Telegram channel. That's where we break down trades live, share analysis and post trade ideas from the team. So the link is in the description. So my name is Dennis. I've been trading for 7 years and the most valuable thing the market taught me is to stop and breathe. So see you in the channel.